Hey everybody, it's Shannon from AlphaTrends.net. Today is Saturday. It's the 28th of November, 2015. Hope you had a good Thanksgiving and half day yesterday. Let's take a look at these markets here. The S&P finished with a marginal gain this week. Nasdaq down ever so slightly, but the Russell and the Biotechs had a good week here. So let's take a look at the charts and see where we're at and what we've got going on in this environment. The S&P 500 has been trading in a pretty tight range here over the last week, barring last Wednesday when it gapped lower. So let's take a look at the 30-minute time frame to start. And this was last Wednesday where we had gapped lower, but did quickly recover. So right now, going forward, this is going to be an important level here over the next week or so. Going into Monday, I think here's what we're looking at. We've got a rising 5-day moving average, and this market is in a little bit of a band of resistance here. It's consolidating nicely, and I think that you look at it and say that which doesn't kill it makes it stronger. The buyers stepped in very quickly right there and ran some stops, some shorts got involved and that sort of thing, but the market recovered quickly. So what we want to see going into next week is the first level we want to see hold as support would be about 208 and a half. If we can hold 208 and a half, then I think it's highly likely we do continue to break higher. I didn't mean to grab a hold of that, but I think it's highly likely that we continue to break higher from here and that we see that the S&P 500 goes on to continue to work on what's been a band of resistance for it here from earlier in the year. So, we've got the volume weighted average price year to date. We can see that we're maintaining above that. We're above all the key moving averages as well. And we've got this prior level of resistance up in this area. So it may be that it just still needs some time, but it is setting up bullishly right now. So the benefit of the doubt goes to the buyers. If we maintain above 208.50, then then I think that it's likely that we break out. If we break down through that 208.50, though, what we'll see is that 5-day moving average will flatten out and then begin to decline, and that could lead to an intermediate term sell-off that if the 207.5 were not to hold, then we could see it pull back a little bit more deeply. So what we would be looking for, in other words, is the benefit of the doubt goes to the buyers right now. If we break below 208 and 50 and hold below there for more than a half hour, then we go down to test this level. If this level fails to hold, then we're going to be seeing lower highs and lower lows below a declining 5-day moving average. So that's the potential of what could happen in there. But for now, we go into next week and the buyers remain in control. And that's the same for the NASDAQ as well. The NASDAQ, the buyers are in control here, obviously. We've got a rising 5-day moving average that we're holding above. And the daily chart, we've got that 10-day moving average about to come up through the 20, which is above the 50-day moving average as well. Looking at a weekly chart, obviously, we had that big pullback. And then in the last couple weeks, what we had seen was that, the break higher, we pulled back, and that prior band of resistance held as support. So that's this level right in here. And we've got the market now in a position to be able to continue to move higher, kind of similar to the S&P 500. What we want to see is this is the bigger, more important level to hold for the NASDAQ. And if we hold above that, then the buyers remain in control. Here's our near-term band of resistance. But if we break down and we start to see that a pattern of lower highs and lower lows develop below a declining 5-day moving average, then it means we've got to become a lot more defensive about this market. The Russell 2000 has had a real nice run here over the last week and a half after going from 113.5 up to 119.5. So what we see happen a lot of times here, of course, we broke that downtrend line. That resistance at the downtrend line held, and we held this 50-day moving average, and we've seen this rally really develop nicely. Now, the thing is, we have to ask ourselves, where has the market come from? It's just come from 113.5, and it made it through this band of resistance right here for now. So what we see a lot of times, though, and what to be aware of is that the breakouts that occur after a significant rally like this 5.5% rally over the last week and a half, that it often pulls back right soon thereafter. So if it pulls back, I think it's okay if we pull back down towards 117.5, and you've just got to be careful about chasing a market higher. Just because it's making a new high for several months here does not automatically make it a buy, because yes, the buyers are in control, but they have been in control with these higher highs and higher lows as it's kind of jointed itself higher in here, in these areas that we can see. We've got, again, the higher highs and higher lows above that rising 5-day moving average, but we've gotten a little bit extended, so it just doesn't make as much sense. You certainly don't want to sell short, but be aware that if you're going to sell short, it should be done for only day trades while we're above a rising 5-day moving average. The buyers still have control. In order for the sellers to gain control, we need to see something like this happen again over here, where we saw lower, resistance at a 5-day moving average and a declining 5-day moving average that then breaks down. For now, though, we'll be looking for ideally a controlled pullback in this market down as low as 117.5, but hopefully it could hold up a little bit higher than that. So just don't chase it. Don't put yourself in a position of weakness right from the beginning of a trade. Semiconductors hold up well also. You can see that 10-day moving average about to cross up through the 20-day moving average. And we've got here on this daily time frame, you can look at it and say, is this what's holding us back? We've got this, what's been this band of resistance right up in here for these semiconductors. So let's redraw that actually on a intraday time frame. We'll go down to the 30-minute time frame and we'll just open that up a little bit. So here's where we've been over the last month and a half, and we can look at it and say this has kind of been the band of resistance. Now that's been the down sloping trend line. We've also got this level here, so 55.5. Now what we had seen this past week, let's just back this up for a moment because this was important, that we had seen a breakdown through a key level of support, but that level of support, once it was broken, it rallied back up quickly and then held the 5-day moving average. From there, it was higher highs and higher lows. We had a little pullback through that gave us reason for caution, but the buyers are back in control. So now I think that if we can maybe rally up towards 55.75, pull back and then do something like this, then it puts this market in a condition where it seems as though the buyers should be able to control it and continue to control it, and it should be able to move higher. For the biotech index, this is one that we've had a close eye on as it's been battling with this downtrend line, and it's broken and held it. Now we've got key support found right there near that 331 level. Let's just back this up a little bit further so we can take a look again at what's been an important level, and that being the volume weighted average price year to date. So again, this is TC2000, the charting, and they've got this awesome little tool where you take this anchor and clip it right to where you want to begin the volume weighted average price from, and you can see that volume weighted average price, the purple line, has been resistance over the last month and a half. But what happened was we made higher lows, we worked at it, and now it's broken beyond that level. So what we have happening here, and by the way, if you're seeing this video and it looks at all blurry to you, just it's been recorded in as high def as you can record it in. What you need to do is just expand it full screen. Down in the bottom right hand corner, you've got those arrows that point in 4 different corners. Click on that, it opens it up. Anyways, for the biotechs rather, we've been working at that volume weighted average price year to date, and as I was just saying, we have this higher low in here. Now, over the last week and a half, we've seen that this level was tested a number of times, and if the sellers were going to gain control, they had their opportunity. Instead, what we saw was that the buyers, let's just do this, that the buyers, stepped in. We had I keep grabbing the wrong trend tool. We had a little shakeout, but again, we've had a rising 5-day moving average. So we only want to get bearish. That gets us cautious. We want to get bearish if the 5-day moving average is declining and we see lower highs and lower lows. That is not what we saw. Instead, this level held as support, and this little band of resistance was broken on Friday. We got beyond the volume weighted average price year to date, and the buyers are in control of the biotechs on the intermediate term. I would think that if you're long, your stop would go underneath one of these higher lows, whatever works best for you personally on the time frame that you engage the market. But buyers are back in control of the biotech index. Yes, we have a declining 50-day moving average, and that's something to be aware of, and I often say that the direction of the moving average is more important, but what really is the most important thing is price action. Only price pays. If you're long, you look at it and you say, I'm not going to argue with the intermediate intermediate term trend, and instead I'm going to manage risk. I'm going to say, where does my stop go in case the market pulls back down? I don't want to be the guy stuck with it down here at 320, but I'd rather get out and limit a loss if that is in fact what happens with the market. But right now the buyers are in control. Now Apple's been similar, that Apple has been fighting its volume weighted average price year to date as well. There's that volume weighted average price year to date. You can see we are just still below that. So we had seen that Apple's really kind of been doing a whole lot of nothing. We saw that this prior band of support over in here did act as resistance recently. Then the company reported earnings. The volume weighted average price since that earnings event, let's take a look at that together, is right here. So that was the earnings, and we're trying to hold that volume weighted average price since that earnings report. Now we've got, looking at this 30-minute time frame, we've got a declining 5-day moving average. That's not good. Now if we break below really 117 and a quarter, 117, this little band of support in here, if we break below that, and then we see a pattern developing that looks like this, it's guilty till proven in the intermediate term time frame. So right now, there's no reason to be a buyer of Apple, but if it can maybe hold up in here and work away at this 120 level, where we also see that volume weighted average price year to date, then perhaps Apple can turn back around. But for now, I just don't see any real advantage to be long shares of Apple. Thanks for tuning in. Enjoy the rest of your weekend, and I'll talk to you again next week.